Hi, my name is Steve Toderick. I'm with Sprott Global Resource Investments Limited. I've spent my whole adult career life working as a geologist in the mining industry. Initially, I went to university in Vancouver, British Columbia, Western Canada. Then I started working for big and small mining companies like Newmont Mining. And then I started to work for a geological consulting firm in Vancouver for a number of years, and then that led me to start working as president of two of my own junior mining exploration companies, similar to ones that we're going to be talking about today. Today I'm going to tell you about what I believe is the best way to invest making money in junior mining exploration companies. There's a saying in the mining industry that the most exciting thing in the business is if a little exploration company makes a brand new good looking discovery and then they can successfully drill it over the next 2 to 3 years, growing it into a big deposit at good grades with the culmination of a major mining company coming along taking them over. If you can get in early, right around that discovery stage, and get out at the takeover, that's usually the best way to make the most amount of money in this business. So today I'm going to give you a number of examples of historical companies that have made discoveries and culminated in being taken over. Along the way, I'll tell you about a couple that didn't work out, and then I'll finish off my talk telling you about a couple of the most current examples. This is a very common and popular stock chart depicting what happens with early stage exploration companies that are out, trying to make the next discovery, knowing that the odds are horrifically against them, and then what happens to the share price and the evolution of the company over the years from start to finish. There's about 1,000 to 1,500 exploration companies listed on the Canadian Stock Exchange and that many down in Australia. Most of them are out toiling away here on their various mining properties, all doing various types of surveys, starting with satellite imagery to airborne geophysical surveys to on-the-ground surveys that include soil sampling, prospecting, geological mapping, detailed ground geophysical surveys and whatnot. They're all trying to identify targets or anomalies to drill test, hoping to make the next big discovery. After 35 years of being in this business, I don't believe anybody is capable of predicting with any regularity which junior is going to make the next discovery. So anybody that's basically buying in here is basically guessing or trying to guess who's going to make that next discovery. I don't play that game. What I believe a way to increase your chances is sit back, wait and watch for all these companies doing their thing, and wait for the one day that comes along where one of these companies will put out a news release announcing that they've just drilled that first good drill hole, the discovery drill hole on their mining property. And at that point, they start to do various types of due diligence. If I like the width of the drill hole, if it's good economic width, and if it's good economic grades, I'll talk to the company. Ideally, their president is a geologist, so that he and I can talk on the same page, look at their website, maps, whatever information they have, and if I like it as quick as possible, I'll start to recommend it to my clients so we get in here. And from that point on, what a company will do is they'll move the drill over a little bit and try drilling another hole to hit that same mineralized body. If they do, they move the drill over a little more and a little more, and they keep drilling it over time to see if they've got the next discovery. This period from the time they drill the first hole until the day, if they've defied the odds, if they're able to grow a big deposit, it'll take them 2 to 3 years of drilling along this point, where they're putting out news releases frequently, commonly every 4 weeks, giving us updates and drill hole assays and whatnot. So right now we'll take a look at a couple examples of juniors that made that magical discovery. Back in 2004, there's a little company called Virginia Gold. They'd been toiling away on their gold property for a number of years in eastern Canada and Quebec, and then one day they announced this discovery drill hole. It wasn't spectacular, really good, but it was good enough. And I started recommending my clients get in about $1.25. At that point, we're just going to sit back and wait to see what happened over the next 2 to 3 years of drilling, and see if this was the next one. Another example in 2006, this turned out to be the biggest home run or success story that I've had with my clients. This little company, nobody had ever heard of them. They had a mining property in Ecuador. They were down there toiling away, doing all their initial surveys. They actually, started drill testing another number of these anomalies. It wasn't until their 43rd drill hole that they got the big one. And they'd been trading around 50 cents prior to on that announcement. Within days, the stock jumped up to $3 a share. While I did my due diligence, talking to the president of their company and looking at maps and everything, I was comfortable. And at $3 a share, I felt comfortable. Okay, I think this is an extra special discovery. Let's get into the stock. And we started buying it. Got a good position here at $3, and then we sat back and just watched them drill. So if you have a junior that's made this discovery and they're able to successfully drill and grow it over the next 2 to 3 years, at a certain point, if the deposit is big enough and good enough grade, this is when you tend to see the first wave of takeovers where the major mining companies move in to acquire the deposit. I'll back up a little here and say that at the point of this discovery, a little while after that, the major mining companies start to pay attention to it. If they keep drilling it over time, at a certain point here, the major companies will go knock on the door of the junior and say, we'd like to sign a confidentiality agreement with you that'll allow us to send our geologists out to your property and talk to your geologists, look at your drill core and other information they have. What they want to do, the major wants to get close and warm to the story so that if it gets to this point, they've already done their homework on this project because they might be concerned that they're not the only big company that wants it. There's a lot of big mining companies. They're all looking for the same thing. So you could have a bidding war here. So at the right time, you want to be ready to go. You don't want to just be starting your due diligence here when all the other companies have been in on the project over that period of time. So we'll look at some examples where takeovers took place right there. Virginia Mines was one of them. After 2 years of drilling, the deposit, grew to be big enough up here. It was over 5 million ounces, a really good grade. One of the big gold companies, Goldcorp, came along and made a friendly takeover offer, $10 a share. So that was a real good win, getting in around just over $1. We rode it all the way, got out at $10. Aurelian Resources was another one. At the end of the day, after a couple of years in 2008, 2009, Kinross Gold came along, offered the equivalent of $34 a share. So we got in around 3, got out at 34. That was a great one. Hathor Exploration toiled away here, made their discovery. I recommended clients get in around 80 cents. At the end of the day here, about 2 years ago now, 2 big uranium mining companies, Cameco and Rio Tinto, duked it out in a bidding war. Rio Tinto ended up getting them at $4.50 a share here. So that was a good win all the way. You can look at this stock chart. In a lot of these stock charts, there's more information in the story. For example, here, after going from 80 cents, getting as high as $4.50, this sharp decline was the financial banking crisis of 2008. Everything just got slaughtered. You have to know what's going on in a stock. Most investors are panic selling here, getting out of the stock, all the way down around $1.45. I was advising my clients to sit tight. The drilling results have been fabulous. Let's stay, avoid all this pandemonium as hard as it is. Sit tight, because I'm betting that with ongoing drilling, we'll have a happy ending here. If anything, sit tight, or if you can, buy some more at this low price. It's a really good buying opportunity. And thankfully, after the banking crisis, the stock recovered back up to $4. Then it softened up for a few other reasons here. And then we had another big event we're all aware of about 2 years ago. Also, we had the earthquake and tsunami in Japan. With that big nuclear scare, investors just were throwing uranium stocks out the window, panic selling, and Hathor was subject to that. Again, got down to a low point, almost down here again. I said, we've been through this once before here, sit tight. In all this time, Hathor has been doing a lot of drilling. They've grown their deposit a lot bigger, fabulous grades. So let's ride this out, and fortunately we did. And then we started getting the takeover offers up here, culminated with a happy ending up there. All takeovers don't happen here. Even though the juniors, made a discovery, they've grown it into a big-looking deposit. Sometimes the major mining companies aren't happy with all the results. They want to see some more studies or work done to de-risk that project a little more before they pay all the money to take over this junior and then, start to build the mine with a lot more money. So we'll look at some examples of stocks that go through this curve. This is called the quiet time in a stock. You know, it's boring, it's going to sleep. They're advancing the project. They're doing work to de-risk it, but investors don't look at it that way. They say, you know, during this part, there's not going to be any takeover. Another thing we can talk about here is things don't always work out well. Sometimes, backing up a little here, a junior announces this exciting discovery, and they can move the drill over, hit it again and again and again, and then they move the drill over and it's not there. What that means is this discovery amounted or resulted in a small or medium-sized deposit. Grades might be okay, but it's just not big enough. If that's the case, the stock tends to just, plummet and drop off because they may as well not have spent the money finding what they did. It didn't amount to anything. So we'll look at a few examples of stories that didn't turn out well. Serengeti Resources back in 2006, they'd been trading around 20, 30 cents. And then one day they started announcing some pretty good drill holes. Did my due diligence. I liked what I was seeing. Started getting clients in around 60, 70 cents. The stock ultimately went up over $4 a share as they're moving the drill over. And along the way here, what happened is they announced a really good drill hole, created a lot of excitement, but then they moved the drill over a little more and the day came where it just wasn't there. They only ended up with a small to medium-sized deposit. As soon as investors realized that, they started selling and bailing the stock, and the share price just dropped, and eventually they're down here around 8 cents a share right now. What they need to do is hope they can find another deposit close to this one here. Maybe they can, maybe they won't, but we sold out along this way here and licked our wounds. Colorado Resources is a more recent example where about a year ago they created excitement with a really a pretty good drill hole, real good width and good grade. But this is a case where they moved the drill over, the first time to try and hit it on the second one, and they couldn't duplicate it. And they kept drilling around and didn't find really much at all. So the stock, went from probably 15 cents, hit a high of $1.25, and it's just, traded down here. It's now about 30 cents a share. So, basically lick our wounds and move on. So now we'll look at some examples of stocks that are riding this part of the chart here. MEG Silver made a real nice silver discovery back in 2006 on their property in Mexico. They're in a joint venture with Fresnillo Mining, the biggest silver mining company in the world. They announced that first good hole. I recommended we get in around $2 a share. They kept drilling and drilling. Silver prices started rising, and it all culminated. MEG Silver hit a high of $18 a share up here. Then we ran into the financial banking crisis, whacked them down, and right down at the bottom at the end of 2008, MEG Silver's partner, Fresnillo Mining, announced a hostile takeover, and things turned really sour in their relationship, as you could manage. MEG Silver shareholders fought off that takeover, and they've survived to this day here. That's been like 5, almost 6 years now. Fresnillo has stated and shown us they like the deposit, they want it, they tried to get it, they failed. They just have to make a good, fair, friendly offer, and they can own it. So far, they haven't done it. So the two companies, they're in this stage coming down here. They're building the mine. It's the boring stuff. It's not really de-risking it. Fresnillo is a big company. They're involved in this. They're advancing it. But I'm expecting and predicting that somewhere going out in the future here, Fresnillo will move to take over MEG Silver. The only other outcome is the two companies build the mine together, and when it's built, they start to produce silver. MEG Silver is going to get 44% of it, and it's going to be a very rich mine, very profitable. That's actually the best outcome for MEG Silver. But in the mining industry, there's rarely been an example where a big company will build a big mine with a junior and then share all that profit and glory. They tend to be greedy. They want it all. It's also a lot easier, when you're running it yourself and you don't need to account to someone else. Another example, more high-profile current example, Pretium Resources announced this new discovery back in 2010-11, around $6 a share. I started getting my clients into it. I like the really high grades of it, and they kept drilling, growing it bigger and bigger, and along with the rising gold price, ultimately hit $18 a share. And then we started to find out how big the deposit was ultimately, and then we start. There was no obvious takeovers right then. We all knew it's big enough, and the grade is fabulous, but there's some unanswered questions here that the majors want. So Pretium has been, addressing those, taking bulk sample results, more drilling, and community relations and whatnot. But this everybody tends to agree this is too big and valuable a gold deposit for the majors not to acquire. So, we're expecting, we'll be moving up this curve here somewhere going into the future. Sort of finish off here, I guess, with some current examples. About 12 to 15 months ago, we had two uranium companies, Fission Uranium and Alpha Minerals, in a joint venture partnership. They each own 50%. They announced that first good drill hole. I think it was 18 meters of 1.5% copper. That wasn't really good, and it certainly wasn't spectacular, but in my books, it was good enough to tell me as a geologist that something extra special is going on this property. They made mineable width and economic grade, so I started recommending my clients get into Alpha Minerals here at $1.50 when I negotiate a private placement with the company that allowed us to get that extra special warrant. It was a half warrant, good for 1 year only, at $1.80. Then Alpha and Fission continued drilling the property over the next year, which is the last year, and they've just had tremendous success growing it bigger and bigger, and the share prices have risen. Ultimately, Alpha Minerals hit a high of $7.50 after we got in at $1.50, and that warrant we got at $1.80. A year later, we had to exercise it. That was a real profitable warrant. Because we've had a really good success story here, and the deposit looks like it's big enough now that they're likely going to be taken over at some point in the future. Late last year, Alpha Minerals and Fission Uranium decided to merge so that one junior would own 100% of this deposit, which cleans up the deal and makes it easier for a big mining company to come along and take over and acquire 100% of the whole project. Fission is the surviving company. They continue to drill it. They're currently trading at their all-time high of about $1.70 a share here. I'm hoping that the big companies don't come along anytime soon and spoil the party here. I firmly believe that if Fission can keep drilling this and they'll grow it bigger and bigger, taking their share price and market cap higher and higher, and then it'll culminate in a takeover where a major will come along and offer 30 to 50% above what they're trading at. So that's looking really nice. Another example right in around the same time here, a few months earlier before the Fission and Alpha discovery, another company called Reservoir Minerals. They've been toiling away over in Eastern Europe with Freeport-McMoRan in their joint venture. Freeport's paying all the bills, doing the surveys, and started drilling. And on this one target, this one day, they announced the first good hole, that the discovery drill hole was a nice wide interval of good grade, not spectacular. It's 262 meters of 1% copper, and that was good enough grade over that width for Freeport to build an underground mine, in my opinion. So they've just continued drilling and having fabulous success. They're currently trading at their all-time high now, around $7.15 a share. About a month ago, Reservoir announced their first ever resource estimate, and they told us how big the deposit is, what the grade is. It's good size and it's really rich grades. 62 million tons at 3.5% copper equivalent. That's fabulous. It'll definitely be a profitable mine. So there's a line of reasoning that Freeport, should take them over right now, but for whatever reason they're not, and I hope they don't. Again, I don't want to spoil the party here. I think with ongoing drilling, Freeport and Reservoir will grow this into an even bigger deposit, taking their share price higher, and then culminating with that takeover and 30 to 50% takeover premium. So hopefully in today's talk, I've demonstrated that this is I think the best way to increase your chances of investing in these type of stocks. Get in somewhere around this early stage discovery announcement, and then ride it all the way. Hopefully it's this simple. You get out here in 2 to 3 years times. You don't have to go through this, and then hope for a takeover up there. So get in here and ideally get out there. If you have any questions, please feel free to give me a call. My phone number is there, or send me an email, and we'll touch base with you. Thanks a lot, and take care.